Hi, everyone, and thanks so much for joining this webcast between President's Institute, which is managed by me, and President's Institute, which is co-founded by our guest speaker here today, Lars. We're really, really excited to see so many joining in. It's fantastic, and I'm just going to tell you a little bit about first what the format will be, a couple of words about Lars and what we'll be going through, and then Lars will take over. The webinar will last around 1 hour, and you can ask questions by writing out here. I'm going to read these questions and take a couple of breaks during the presentation to ask Lars some of the questions. If you see a question that you find interesting, you can very easily just upvote it instead of writing it again, and then we can see the questions that most people want to get an answer to. Before we start, I want to say a couple of words about Lars for anyone who doesn't know him super well. He's not a virologist, and he's definitely not a corona expert. But he's a bit of a polymath when it comes to education, and he has a professional background in engineering, commerce, financial trading, and a lot more. He's authored 16 books on technology, finance, trading, the future, and he has 2 companies, Supertrends and Supertrends Institute, that deal specifically with how to understand future trends and how to navigate them. Lars has demonstrated over the last 30 years that he's a quite knowledgeable investor, and the latest in connection to this corona crisis, which is why we're here today. On February 21st, he wrote to all of his friends and followers that he had, after being invested for 10 years, he decided to sell all of his shares in the stock market. This was 2 days after the market had reached an all-time high and was super close to the top of the market. A couple of days after, the market started sliding, and only 4 days later, Lars wrote to everyone that he had now started to go short and posted every time he made a trade to sort of document what he was doing. Over the last weeks, Lars has managed to make a yield of more than 100% during these times where the markets have declined faster than ever. So I think it's pretty safe to say that he is fantastic at this topic. So in order to understand how this crisis will deal with the financial markets and how to navigate in them, it's important to understand what we're actually dealing with and how it's going to impact the national economies. So before we're diving into the latter part of the financial markets, we'll be speaking a little bit about what the virus is, what we know, what we can expect, the impact it will have, and then finally how to navigate that as an investor. Without further ado, I'm going to give the mic to Lars now, and very excited to hear what you have to say, Lars.
Thank you very much. One thing that seems really strange to think about now is how short time it has been since the corona or COVID-19 was discovered. So it was discovered by Chinese authorities on December 30th last year. So it's not even been 3 months since they discovered it. Then sequenced the genetic code, which is RNA. It's not DNA, but RNA. And they sent it to the World Health Organization. They then sent it out to scientists and labs all over the world. And just 2 weeks later, in Australia, a lab had a culture which they sent out to different laboratories around the world. But meanwhile, while it was contained in China, it has spread all over the world. And now we have these horrible statistics like the one you are seeing now on the screen, which is from today. However, as I will go through, especially the top number of those statistics are entirely wrong. And the people who make the statistics know about that, but I'll just discuss a little bit about it later. So first, as Matthias said, I'm not a virologist, but like so many other people who deal with business and finance, certainly we are forced to read up on this stuff. And now we have in major investment banks, tons of people who are sitting there who are maybe economists, but they're trying to understand this virus. First thing that is really striking about it is that it's highly contagious. It infects at a much higher rate than common flu. So the average infection rate for a flu is what you call R0, is 1.5. That means that on average, every person who is infected will reinfect 1.5 other person. Now, as long as that number is higher than 1, it continues to grow exponentially. At some point, either because of seasonality or because you get herd immunity, because so many have already had it, the number goes below 1 and then it disappears by itself. Now with Corona, it's not 1.5, it's 2.5. And the difference between 1.5 and 2.5 is explosive. It's like, if you can compare, you throw a firecracker into a room full of people, that's 1.5. This is a hand grenade. 2.5 is a hand grenade. It goes much, much faster. If you put it into Excel and test it, you'll see it explosive. Why does it infect so much? One of the reasons is that it can infect before people have any symptoms. Yeah, here we see infection rates, total cases and total death. And it leveled off because it got it under control, or almost under control, in China, but then it took off in the rest of the world. But what happens is that probably about 25% of infections happen from people who have no symptoms yet. So pre-symptomatic infection is something I've seen among my own friends. I am here in exile in Verbier in a chalet, but I have a lot of friends in Verbier, and many of them actually have gotten infected. So they meet at a dinner party, everybody are feeling well, they sit and have dinner, and then they go home. And then 5 days later, one of them calls the other and says, I actually got tested for Corona, I have it now. And then 2 days later, all the other ones have it. So that's one thing that makes it very different, because normally with flu, you don't infect until you have symptoms. And when you have symptoms, you tell people, stay away from me, I have flu. This is not like that. The other thing is that lots of children and young people get zero symptoms, and that means that they can walk around like moving bioreactors and infect everybody around them. In Italy, where you have such strong family traditions, they have warned very much against, the grandparents sitting with their children, and the children are infecting the grandparents and literally killing them by mistake. So that is one problem. Another problem is that it seems also to be able to infect after you have recovered. There's a lot of uncertainty about that, but there's at least a theory that it can infect perhaps 3, 4, 5 days after you have completely recovered. So the way it infects is through droplets that come out of your mouth when you talk, laugh, etc. And they can then fall on objects, and they can survive on objects from a few hours to a few days. There was one meta-study that showed that actually it can survive up to 9 days, but that's extremely rare. But the droplets fall down unless it's windy, and that is why this social distancing, where we say even 1 meter makes quite a big difference. Droplets come out, they fall down to the earth, to the floor, to the ground. 2.5 meters is a lot better. One of the things that I was not entirely aware of is that you can get infected, meaning you can inhale some of these virus. They come into your throat, but before they enter any of your cells, they will be pushed up by motile cilia, which is these little hairs that you have in your throat. And then you swallow, and they go down into the stomach, and then they get killed there. So for that reason, it's advised to drink quite frequently. And that is probably also, that combined with something else, is also one of the reasons that common flu is probably less widespread in summer. And that is that people drink more, and they don't have so dry glands. So I think all of you have seen the numbers that say about 80% have no symptoms or mild symptoms. I know some who have had very mild symptoms. 20% get clearly ill, 5% need intensive care. Approximately 1% also need artificial breathing assistance. In terms of mortality, first, it's very, very age dependent. I think most of you have also seen these numbers. So nobody, so to my knowledge, below 9 years have died from this. And if you are up to 40 years old, death rates are very low. and almost entirely associated with some medical precondition. But when you get older, death rates go up. And if you have a confirmed case and you're more than 80 years old, it's actually 20%. So it's very different from, for instance, the Spanish flu. Now, about death rates, it's been so confusing because in Wuhan, they had 6% mortality. In Italy, at one point, the mortality they reported was around 7%, and it hasn't moved much from that. But then in South Korea, it was 0.9%. So how is that possible? So there's one thing is that in South Korea, they test a lot, but really a lot. And that means that they take the percentage who die from a much bigger confirmed base. So in other countries, we have a very large shadow number, which I'll come back to, which might be actually huge. So that is one thing. The other thing is that if you overload the healthcare system, as they did locally in China, and as they did even more perhaps in Italy, then the mortality shoots up. There was one study that I saw that compared mortality in different places. In the Wuhan province, it was very high. Outside of that province in China, it was only 0.8%. Then they looked at 82 countries and territories, and there it was 4.2%. There was this cruise ship in Japan, it was 0.6%. So they concluded that probably the mortality is a range of 0.25 to 3%. 0.25 to 3%. So that is about 2.5 to 30 times as much as a common flu. Now, let me put that into perspective. I have here a graph. Some of you are probably watching this on a phone, can't see it, but I'll just summarize some of it. Of epidemics and pandemics. So an epidemic is a known disease that spreads worldwide. A pandemic is a previously unknown disease that spreads worldwide. So COVID-19 is a pandemic. But we had one that was called MERS, Middle East Respiratory Syndrome, and that had a mortality of 37%. 37%. But fortunately, they managed to contain it with only 2,000 people infected. Then we had another one, which was called SARS. That had a mortality of 10%, but it was contained with 8,000 people. So we really dodged a bullet in those two cases. Now, the famous Spanish flu, just after World War I, killed 17 to 15 million people. It infected probably a third of the world's population, and it had a mortality of 2-3%. Now we have the COVID-19. As I said, it has a mortality of 0.25% to 3%. And then we have the common flu, which is 0.1%. So the problem here is that COVID is, as I said, 2.5 to 30 times as dangerous as the common flu. It also makes you more ill, even if you survive in many cases. But it spreads more than the common flu. The last one I put in is the swine flu, where there was a big panic, and the swine flu actually infected probably 700 million to 1.4 billion people in the world. But it turned out that it was even less mortal than the common flu. So we have actually dodged a few bullets, and it's amazing that we haven't prepared the world better for this one, which we are not dodging. So now let me get back to the question of how many people are infected now. So on the early chart, you saw that today the official number is 246,000 people, which is a lot. I want to go into the case of Iran. So the official number today is that Iran has 18,000 people. And just keep this photo on here. What we see here is a satellite photo, which was displayed in Washington Post and different other reputable sources. And it's supposed to show a mass grave that has just been created and is being filled up in Iran. So on March 9, The Atlantic, which is a publication, they made 6 alternative estimates of how many infected people there really are in Iran. And they used different methods. One was, they looked at airline passengers that have arrived from Iran, where everybody had been tested. They looked at known numbers of how big a proportion of politicians, of members of parliaments that are infected. They looked at a website where Iranians could report symptoms, and about 9% of the population reported symptoms that appeared like the COVID-19. They looked also at Chinese that were evacuated from Iran and then tested when they arrived in China. And the range they calculate based on these indicators was between 590,000 and 8 million infected in Iran. So far higher than the official number. In fact, it was between 90 times higher and 1,200 times higher. Of course, we cannot say that these numbers are right, but we can say for sure that the official numbers are way, way, way too low. This, as I said, the study in the Atlantic was done and published on March 9. Since then, the official numbers have gone up 3 times. Because in March 9, there were only officially about 6,566 people who were infected. And also they should have gone up 3 times at the way this virus works. So if we take the numbers I recited before and multiply by 3, we get to 1.8 million to 24 million infected. Again, I have no idea if these numbers are true, but it's clear that it's very, very bad.
Lars, if I may just drop in here. We have a couple of comments on the notification. And I think they're coming because your mic is on. Could you, in the top, there's a little bell right next to the actions button. If you could click that bell, those will be muted.
Yeah, that's done. Okay.
Perfect.
Okay, so the other indicator we have is there was a test after the Chinese more or less got the infection rate under control. Some people looked at how many people were actually at any given point infected compared to the official numbers. And maybe you can find the graph that shows this. Yeah, here we have it. So we have on this graph to the right, we have the official number of people infected. But for everybody, they went back and asked, when did you have the first symptoms? And then they calculated how long would the incubation time be. And what they found is that during the acceleration phase, on average, there were 27 times as many infected as were officially known by the authorities. And this is not because the authorities were dodging the numbers. They just did not have the correct numbers from people. So if you look at the numbers that are reported every day, and then you multiply that with 27, and I know this is really a back of the envelope estimate, but then you get up to about 6.6 million infected today. So this is just order of magnitude that it might be that, and this is excluding the extreme case of Iran that alone contributes a lot. So big numbers. Now we all see, and I continue to see, and it just amazes me, but I continue to see people post things on the net, also well-educated people, even politicians, that says stuff like, but you know, what's the big deal? Last year, so and so many people were killed by traffic accidents and flu and so on. You even see, even worse, you see some people that said this year, so and so many people have so far been killed by this and that and the other. So what is this? Now, if we assume, if we're very negative and we say that actually there are 15 million people infected today, not 160,000 or so, 15 million people is 0.2% of the world's population. So that hand grenade that we are thrown into the room is just beginning to detonate, and we are just at the beginning of it, and will go extremely far from now on. I think there were some politicians, some places that did not really understand how fast this can go. There was a report issued by the Imperial College, which is a British university, that I think changed the mind both of the government in the UK and also Donald Trump. Cannot be sure that that was the key thing, but they made a calculation, and we have a graph of that compared the intensive healthcare unit capacity of their countries, and then what would happen in different scenarios. Matthias, do you have that graph? The graph of from Imperial College, yeah, that one. So the red line down on the bottom is flat, and that shows the intensive healthcare capacity, and then the other graph showed how many people will need that. So every scenario showed an overload of the capacity. And that was really scary. And the other thing was that there was a presentation by an association in the US that calculated what would be the likely consequences of this for the US. And we have a graph of that also, if you can find that, Matthias. But yeah, we have it here. I'm not going to go read all of this up, but if you look at what is written in bold at the last line below, it says, prepare for disease burden roughly 10 times severe flu season. And it also predicts 480,000 deaths in the US. Those are the three things. It mentioned in the first line, first bullet up to the left, it says that doubling time is 7 to 10 days because the reinfection rate is 2.5. So very different from a normal flu. And again, when people say the numbers are very small, this is because we haven't really started. But we're starting right now, and it's going to be horrific the next 2 months or so. Now, there's a big question about seasonality, because the most forecasters predict that or expect that we will have a leveling off during the summer. And there have been studies indicating that that is indeed the case. Here's one, and this one has some black circles that show places where you have had very high internal infection rates. So let me just distinguish between internal and external. So for instance, Denmark, as I'm a Danish national, Denmark got a lot of people infected very quickly, but they had almost all of them, you could trace them back to skiing in Italy and Tyrol in Austria, then coming to Denmark and bringing it into Denmark. But if you look at where you have had rampant internal infection rates, it's where these circles are. And of course, the colors on this map indicate what the temperature has been during this period, so during the last few months. And you can see that they are all in pretty much the same temperature and also, by the way, humidity range. And also it's the time of the year where temperatures are quite stable because the seasons are turning. So that brings hope. And it can mean that as we move into spring and summer, that temperature range will move north. So actually it could get worse for, say, England and Scandinavia for a while, but then it will move even further north. I'm not even talking about the southern hemisphere, because almost all the people in the world live in the northern hemisphere. So that is one indication. There has also been some tests in China, and where there was a conclusion that there was a quite clear correlation between the average temperature and humidity in different parts of China and how fast it seemed to spread. So there's hope that we will have respite during the summer, but if that is the case, then it should come back in the autumn. And if, let's say, that only 10% in a population has been infected during the spring, or winter and spring, perhaps another 25 or even more will get infected in October, November. So then the question is, what can we do about this? And first of all, when I mentioned earlier on some extreme numbers for how fast this infects, of course, that's assuming that we do nothing. But now we have done quite a lot. So isolating people, as we see now this morning, for instance, California introduced that, has a very big effect, and it really works. Tracing who has been infected and who have they been with has also been affected, but many nations are probably giving up because they don't have the capacity for it. But will there be a vaccine? So there are lots of stories about vaccines, and it's been absolutely amazing how quickly different companies have come up with proposed vaccines. It really took 4 to 6 weeks, and then we had something like 20 different vaccine programs underway. And then many people, I think, misread this, because then you hear that the first people have already been tested and vaccinated, and there will be more next month and so on. The issue is that you have to go through different test phases before you can release it broadly to the public. So you are generally only vaccinating people who are extremely high risk if they get infected. And most people say that it still takes 12 to 18 months from you have the first model until you actually can release it in scale. It might be that somebody comes out with a vaccine that is approved, say, November, but then to mass produce it so that lots of people can get it will still get us into next year. So we should not count on that making a very big difference this year, but we might count on it that Corona will not, or COVID-19 will not be a huge problem for mankind beyond next year. The other thing that is far more promising is that to find medications that have already been approved for other purposes that can alleviate the symptoms of COVID-19. And there are lots of programs going on with that, including medications against Ebola, etc. And that might actually be helpful if we get a wave of reinfection in the autumn. Now, I want to get closer to economics and to investments. And I want to say that as an investor, I have been a macro investor for 35 years. And I have often said, even written in books, that I don't read news. That is, of course, an overstatement, but news is normally not very important for this kind of investments. You look at valuations, you look at where the business cycle is, you look at monetary conditions, but news doesn't really change much. Sometimes the only thing you need to know about news is that people overreact to it. So you have this inner dynamics of the economy, and you just have to understand that very well and ignore external shocks. Now, COVID-19 is different. If you compare COVID-19 to 9/11, 9/11 was a huge external shock in a way. Airplanes were afterwards grounded for some days. We had to mobilize. There was invasions in the Middle East following that and so on. But it didn't really change the daily life of people beyond a few days. Everybody could go to work. Everybody could go to restaurants. Everybody could do pretty much what they had planned to do anyway. Now, this one is really different because every one of us are affected. And lots of companies have gone from normal business or even good business to zero revenues within a matter of days or weeks. So this is an external shock that's very, very different from anything that I have experienced personally during my lifetime as an investor. And as long as it's here, it will have extremely depressing effect on the economies that it touches. There are, for instance, some numbers coming out of China that shows what happened there, and maybe we can get the graph of the Purchasing Managers Index. We can see here what happened with the Purchasing Managers Index in China. So this is not a recession, this is a depression, but it's brief, and they're already coming out of it now because of very efficient containment efforts. So there are two ways you can come out of this situation. One is that it passes in a very ugly way. It gets completely out of control, and then you get herd immunity. So when more than 50% of the population has already had it, then the infection rates, the R0, drops from 2.5 further down and then below 1, and then it kind of fades. The other one is that we have social distancing, and that is what is very, very harsh on the economy. So in terms of social distancing, what I think that what some of the governments have been quite good at figuring out is that if you tell people working in public administration to work from home and you shut down public transportation pretty much, then you let the production sector in the economy continue to run. Then people can take bikes and cars and so on. But because there are not that many people going to work, there's actually space on the streets and so on. So it's like shut down public sector so a part of the private sector can continue to thrive. What will be the overall economic impact of this? There was a big study made in 2006 that we have a graph of. And it had different cases of a pandemic. This was before COVID-19 was known. It was just a simulation with a mild case, a moderate case, a severe case, and an ultra case. So the severe case had 14.6 million dead worldwide. The ultra was about 70 million dead. So we are somewhere probably between the severe and the ultra, but it doesn't make sense to generalize here because it's actually very different from nation to nation. Perhaps South Korea is in fact mild. Perhaps Italy is ultra. So it will be a mixed bag. But what we look at here is percentage GDP loss by region. And if we take line 4, we have Europe, and that is in the severe case, it's a GDP loss of 4.3%. In the ultra case, it would be a loss of 8%. So we are somewhere in that neighborhood. Of course, we have a trend growth rate of perhaps 2%. So we had to adjust for that. But we shall have probably 2 quarters of recession, but harsh recession. But it matters a lot what the authorities do. And authorities have been extremely fast, in my opinion, at taking action here. So cadeau for that. What they really have to do is to fill the bucket, so to speak, to compensate for that. So if we think about which sectors will be hurt most, it's by far harshest on social entertainment and on travel, which some of it is simply illegal now. So they are shut down completely. So the right things to do is, of course, to compensate employees so they can stay away without the companies going bankrupt. And you can take that into many other sectors as well. You have to bear in mind that this got nothing to do with fair competition. This is an external shock that nobody predicted and nobody could predict. So basically, if you say that, to make it simple, you say the public sector is 50% of the economy. In some places, it's like more like a third. But if we say it's 50%, and you have to add 5% to the GDP to compensate for the natural drawdown, then you have to add 10% to the national budget in order to roughly compensate. This doesn't mean that you solve the problem, but you certainly alleviate it a lot. And this is what they're doing pretty well. For instance, in Switzerland, they have boosted the federal budget by 10% roughly. So they are injecting up to 10.5 billion Swiss francs into the economy to help the affected companies and their employees. Now, let's move on to financial markets. I think some of you are only interested in that, but others are not interested in that at all. That's one reason to put it at the end. The first thing I'll talk about is actually a little side effect of this, and this is what happened to the oil prices. So the oil price of West Texas Intermediate and Brent Blend are extremely low now. And actually, we have another graph that shows the perspective of the oil price here. And it's not entirely updated, I think, but you can see that we are very close to what are really, in historical perspective, extremely low levels. So if you go back up to the previous slide, we can see the oil prices per barrel needed for OPEC countries to balance their budget. So Venezuela needs an oil price of $107 a barrel. Saudi Arabia needs 83.8, etc. I mean, these are perhaps too accurate. So of all these nations that are listed here, none are doing well if the oil price is, say, 45, but it's closer to 20. So they're all suffering. And what happened was you had a demand shock. So the demand for oil collapsed because of the COVID-19 crisis. But at the same time, you then got a fight between Saudi Arabia and Russia. And in the beginning, I saw some people saying, yeah, but Saudi Arabia, they can pump oil at, the manufacturing cost is like $5 a barrel, so they can just keep going. But that's not really the true story, because the true story is, they can pump oil and make a profit on it at $22 or whatever it is. But their budget will have a huge deficit, and they're fighting with Russia. And Russia is actually in much better shape. Russia, first of all, has a very big sovereign wealth fund. They have also less dependency on oil, and they are very good at devaluating their currency when they get into these kind of situations. But I think that the longer term outcome is that since both parties really hate to be where they are, that they will come to an agreement at some point and the oil price will go back up. So the oil, I think, should be a buy now. Now, if we take financial markets in general, the situation we had in financial markets was quite extreme before this happened. And this was something I had written a lot about and made speeches about. Because this was the longest economic expansion ever measured by National Bureau of Economic Research in the US, which is the official arbiter of expansion and depressions. So they've been doing this since 1854, and during that time they measured 33 expansions. So the one we have had since 2009 is simply the longest expansion they have ever measured. We set the world record in June last summer, so we were on extended overtime. But actually the economy looked good, and all the traditional indicators signaling high risk of recession internationally were not in alarm mode at all when the COVID came. So if we had a world economy that did not have, for instance, massively overvalued real estate, huge critical debt overhang, etc., etc. So this expansion could have, in my opinion, continued 1 or 2 years more. We had, this was of course reflected in financial markets. So this was the biggest bull market in terms of duration that has ever been measured. It was also the biggest bull market in terms of appreciation that has ever been measured. So the previous record was in the 1990s during Bill Clinton, etc. But we beat that quite a lot. So it was absolutely fantastic bull market. But that also meant that, of course, a lot of investors were nervous about, when does this party end? We've been partying for 10 years. Can this go on? And then comes this horrible news. And then on February 21 in the afternoon, people start to panic, partly because Goldman Sachs and bank credit analysts and others that are really very good analysts send out detailed reports about the corona problem. Now, we see the market as it looks here, and you can, I'm sure most of you track it in different ways. What has happened now is that the risk premium has shot up. So the risk premium is the difference between the earnings yield on equities and the coupon on 10-year bonds, or the interest rate on bank accounts, which is often negative. So the normalized earnings, so what earnings are expected to be or in the long term on average now on equities, is around 4.75% higher than the yield you will get from bonds. And that is a very high difference. So from a long-term perspective, equities are very attractive now. Also, if you look at other valuation metrics, I think lots of models show that we are now as attractive as we were in 1974, in 2008, in 2011, which were all big strategic turning points in the markets. if we dig into which parts of the markets that are most attractive, I want to start with pharmaceuticals, because I hear different people say, oh, pharmaceuticals are because now all people are ill, and so they're going to buy these vaccines and so on. I don't think that story is very strong, because COVID-19 will only be a passing problem. And if you look at the revenue streams for the next 10 years, this will hardly move the dial for these companies. So what is much more important is that pharmaceuticals were considered boring, and they were very undervalued relative to the rest of the sectors before this happened, and they're still quite undervalued compared to the rest of the equities, which are overall, in my opinion, quite undervalued now. So pharmaceuticals is good. I think materials, so commodities, interesting. Oil, I did mention. Something else about the markets, we have a slide that shows the bullish consensus or the greed. No, well, let me just, this one, fear and greed. So there are different ways of measuring how fearful or how greedy people are. And there's a very simple rule, is that you should sell when you have extreme greed, and you should buy when there's extreme fear. And as you can see, these indicators are now in the extreme fear area. So my only question mark here is when this drop in the prices began, I put a target of 2,400 on S&P 500, and I wrote about that and I spoke about that, and that's where we have been around that for the last 2 days. So my only doubt is that the news flow from the US is going to be horrible the next month and a half. So is it really possible for the markets to go up when you have this very bad news? And I'm not sure about that. But if we go below 2,400, I think around 2,150, so 2,150, or at the lowest extreme at 2,000, it's a screaming buy. So I would definitely look at what to buy. I don't think it's wrong to buy now if you have a very long-term horizon. I think it's very, very wrong to sell in panic now. If it goes down even further and you have still more money, I would say buy more. So if we just go back to the long-term graph of the market, that one, yes. If there you see the big collapse, the dot-com bubble in 2000, you see the mortgage crisis in 2008, and then you see what you have now. So especially if compared 2008, what you have now, you have to think about in 2008, you had massive load of bad debts related mainly to real estate in the world, and it was a huge effort to get that cleared up. Now Corona is not like that. This is something that comes. It's on a human scale really horrible. It's much worse, but on an economic scale, it's something that will pass. And when it has passed, most of the companies, and now I have to sound cynical because I can't explain it clearly without, but most of the companies that will go bankrupt here will be restaurants and travel agencies and so on, transportation companies. But the airplanes and the buses and the restaurant buildings and everything will still be there. And as soon as the crisis is over, somebody else will run it, or the same people will come back and run it with some kind of new financing or however it works out. You will not have a huge destruction of very complex industries. It's not like, for instance, if you imagine the German car industry all go bankrupt and you have this complex ecosystems of thousands of companies working together, and it's all gone, it's ripped apart and you can't reassemble it. No. So I think that the economy will jump back quite efficiently. And then one thing that some people are always concerned about is that when the governments are pumping out so much money in fiscal stimulus, will that create hyperinflation? And it won't, because the structural problem in the world for the last 20 years has been deflation. And the central banks are working very hard to avoid deflation. So we are nowhere near having hyperinflation. And what happens mechanically is that the government, they do fiscal stimulus by issuing bonds, which are bought by the central banks, which are owned by the government. So it's like a dog eating its own tail, but it doesn't create any immediate problem. It only would if we had structural inflation, and we don't. I think that those are my words for now. So the summary is that markets were sell the 21st of February and for quite a while since, and now I think it's a buy. I'm not sure if today is the right day, but anything below where we are makes it an even bigger buy, in my opinion. The coronavirus will disappear. The world will be in quite good, if not very good shape economically after that. So that's it.
Lars, thank you so much for sharing your thoughts. There's a lot of people who are very nervous about the real estate market, considering everything that's happening in the economy today. We have a question from Morten Loft Sørensen here, who's asking, how will the real estate market be affected by the virus crisis? Is that something you have any thoughts on?
Yeah, I would say that it's a super relevant question also, because real estate is the biggest asset class in the world. I don't think they will have a significant long-lasting effect, and that is because this crisis will dissipate. And what really hurts the real estate market is when you have structural overvaluation or structural over borrowing in that sector. So I'm not in a position to comment specifically about Danish, because the name sounded Danish. I cannot go into the Danish market specifically, but I don't see the corona crisis as something that should, in the longer term, hit the real estate markets very, very hard. Compared a little bit to the dot-com crisis in 2000, which hit the Nasdaq, etc., extremely hard. But the New York Stock Exchange, industrials, and so on, they were pretty unaffected because it was not relevant for them. So I'm not that negative on that.
Awesome. Next up, we have a question from Mark Steltoft, who is asking, what if you have any recommendations on ETFs to look into? Now, I just want to highlight to everyone that, of course, investing is on their own terms, and it's a risk that you run on your own. But do you have any comments on that, Lars?
Yeah. So this is not my primary focus. My primary focus is when will the market turn. But I did mention pharmaceuticals, materials. I will not highlight any regions. Before this crisis started, emerging markets seemed very attractive compared to other markets, but they have fallen less. So there's not really any preference there. I would probably throw in like 5% oil ETF, so you can also buy commodities as ETFs. I was for a brief period, about 4 days, bullish on gold, but I changed my mind, and I'm not bullish on gold really. It is equities, and I really prefer to buy through ETFs, but mainly some that have a very broad scope.
A quick question, or what just mentioned with gold there, because I mean gold is usually the safe harbor when markets are crashing down, and today we're seeing that both gold and bonds are heading the same way as everything else. Do you have any thoughts on why this time it's different?
It's a credit crunch, so people need liquidity, and that's why they're not really investing even in gold or Bitcoin for that matter. I think that gold is mainly a hedge against inflation, and it's difficult to see inflation. You could argue that, okay, when interest rates are negative, gold is better than having your money in the bank account. But right now, it's not like a lot of people have a lot of money flowing around that they can't find a use for. It's rather the reverse.
Cool. You mentioned during your presentation, you mentioned the possibility of a second wave coming in case we don't find a vaccine or get enough get herd immunity. Do you have any thoughts on how that will impact the economy when we get to that? I mean, if we are facing a lockdown again in fall or next spring?
Or September, October, November. Well, then we'll have a double dip. I do think, though, that First of all, as I said, there's a hope that we have some medication that can alleviate the symptoms. Second, we have the first herd immunity. We have some herd immunity, which means that some people will be safe. They can walk around, they can go to the office because they've had it, and there's no indication that you can get reinfected so quickly after you've had it. And I think emergency care and all the systems around it will be better prepared for the next wave. So I think the second wave, if we get one, will be less serious than the first one. It's really April and May is where the horrible.
Yeah, where we'll really see how the situation will develop.
I just want to say something about the turning point of financial markets. So there's this old saying by JP Morgan: you should buy when there's blood in the streets. I almost don't want to quote it because people are dying from this. So he meant with blood in the streets, he meant when lots of people are losing a lot of money and there's this full panic. And this is what we have financially. But as a matter of the general rule is that bull markets top 9 months before the economy tops. Now, this didn't work at all here because the market didn't, the economy turned because of an external shock. But then the financial markets, they reach their bottom 5 months before the economy turns up. So if we imagine that this is a 2-quarter recession and we're just into it and it turns up in about 6 months plus minus, I don't know, a lot, but and you need to have a 5 months lead. From that perspective, they could easily start turning up within the next few days or weeks, or within the next 2 months at least. Second thing is that markets tend to turn off where where bad news stop accelerating. So they're really early. It's like the second derivative of the change in bad news. And so when you start seeing that, for instance, if Italy was all there was, if you would see that number of infected per day does not climb every day, that would be a buy signal for the financial markets. Problem is, of course, it started in Asia then, and that got under control. Now it's in Europe. It's not under control yet. Maybe it will be in Italy very, very soon. In China, it took 12 days until you had curfew, until the official numbers turned. In fact, the real numbers, they turn the day you introduce curfew, but you only see that in the official numbers 12 days after. So hopefully we should be around that in Italy. So there might be some hope from what we see in Italy over the next days. But then again, we can't ignore what goes on in the UK and the US and so on. But certainly when there's any indication that it's not getting worse at an accelerating pace anymore, that would typically be where financial markets start going up. So what will happen, it might be zigzagging for a while more and then start going up in the spring.
You mentioned earlier on that a lot of the people who are standing to lose their jobs are people from the tourism industry and hospitality. And those types of companies, people will very often bounce back. Do you have any thoughts on what happens when, like, in case all of these people lose their jobs? It's going to be hundreds of thousands just in Denmark alone, potentially probably millions in countries like the US. Couldn't that squeeze demand to such an extent that will cause another crash in the financial markets?
Well, this is where the governments have to do, but also are doing a good job, because they offer them that they can get, for instance, 75% of their normal salary by not showing up for work. So as I said, the government cannot entirely compensate, but they are doing a pretty good job, I think, in most places.
So you think that this is definitely one of the cases where government intervention is very warranted?
Yeah. I am not, and I am not against government. I'm just against big government, but that's another discussion.
Excellent. Great. I mean, we have a ton of questions here. Unfortunately, we won't be able to go through them all today. But what we'll do is we'll share this entire recording with everyone who has signed up for it. I'm very happy to say we've been more than 1,000 people today, so really excited to see that turnout. Of course, we'll also share some more of the slides and sources that Lars has been going through here. Before we finish off, do you have anyone has any last questions? Or Lars, do you have a couple of comments you would like to?
If there are more questions, I'd like to take them.
Okay, great. Well, I think in all fairness, I think this is the high level ones that we'll get through. We have one here on politics, which could be quite interesting to hear your thoughts on if you're interested. Do you think society will revert towards community versus individualism in the past going forward?
I don't think this will change much in terms of political philosophies. I think that it has occurred to me that maybe it might lead to a regime change in Iran, but I don't think it will change much in other nations. I hope that people will heed to the warnings that Bill Gates gave in a TED talk, I think it was 5 years ago, where he warned about a thing like that, and that will build an emergency plan nationally and internationally for other viruses. As I said earlier on, we had several viruses like SARS that could have been much worse than this one, but were luckily contained early. So we have to make sure that we are ready, much better prepared the next time.
Excellent. On that note, I want to say thank you so much for everyone for participating, and especially thank you, Lars, for sharing all your thoughts with us. It's been a pleasure. We will be hosting a series of these types of webinars over the coming months. So I'm really hoping that, and weeks. So I'm really hoping to see a lot of you there. We'll keep you posted. You can go to LinkedIn and sign up to our LinkedIn page, Presence Institute, to stay updated on those. Thank you so much, Lars. It's been a pleasure, and have a wonderful day.
Same here.